Please have a seat. So Benedicte, let's now start our next session. Good afternoon again to all of you, and welcome to the UN Climate Change Global Innovation Hub. My name is Massamba. I'm leading this initiative, and I'm very pleased to welcome you. It's actually a huge opportunity to share with you participants a project, very important project, very impactful with a lot of potential, Genesis 2, a project in which the Global Innovation Hub was involved, and which is aiming at bringing new innovative financial instruments that help redirect finance toward green activities. So welcome to this session, and without further ado, I will give the floor to the moderator, Benedicte. Benedicte, you have the floor.
Okay, great. Welcome everyone. So I will be welcoming my panelists. So first of all, I have Rosie from Goldman Sachs. She will be introducing to you the prototype that Goldman Sachs has worked on. Then we have Bill from Allinfra, who has worked with Goldman on the prototype. And we have Michael from InterOpera, who will be presenting a second prototype. So as Massamba has explained, these are prototypes for bond tokenization, but also with attaching a carbon forward. And the idea is that you could use these bonds to fund a investment infrastructure that will create carbon credits. And the bond, as said, becomes more attractive because you are not just having a bond with a simple coupon, but you have a bond that will automatically deliver the carbon credits as they're being generated. And one more aspect to this is that the way that the carbon credits are being tracked is they're being tracked at source on blockchain. So in some, we will first explain this with some videos. You will see a prototype for the creation of a bond, the placement of a bond, and the tracking of the carbon forward that are being created, and that can, through smart contract, be automatically delivered. And then again, we'll see a second prototype that achieves the same thing. So over to you, Rosie, and the first prototype.
Okay, thanks, Benedicte. So I think, as Benedicte explained, Genesis is really thinking about how you can use blockchain, smart contract technology, and IoT devices to support green bonds, but also a carbon element as well, which is attached to the product. So we did this in the form of a green bond with an MOI attachment. And one of the things that you'll see in the video, and kind of Bill will talk to as well, is we were really keen to look at the full end-to-end life cycle of both the bond and the mitigation outcome instrument, which represents a forward, which will in turn have a deliverable of a carbon credit. So really important all the way from kind of pre-issuance, so book building, all the way through to primary issuance, asset servicing, and then equally thinking about the secondary market component as well. So this is in some kind of what we wanted to look at, and I think I'll pass to Bill to talk a bit about the MOIs, and then we'll play the video.
Great, thanks for having us here today. And I wanted to give a bit of background as to where digital's playing a role on the data side. It's not evident from the video. It would be quite complex to show that in the context of the video. But if you look at the instrument, the MOI being the mitigation outcome interest is an instrument that has the rights to future emission reductions. And an MOU, which is delivered against the MOI, is a mitigation outcome unit representing 1 ton of verified emission reductions. So after the bond is issued and the holders of that instrument, what they have then is a digital data feed that's informing them on an ongoing basis as to the progress of the asset itself. And then over time, that data feed is then sort of pushed through what we call user-defined formulas. So those familiar with either clean development mechanism or voluntary market standards, you have methodologies. Those methodologies involve formulas where you have a data point and another data point, and those need to be perhaps multiplied or divided or subtracted to give you the final emission reduction result. And so those user-defined formulas together with direct data sourcing is then used to then create an MOU, a mitigation outcome unit, on a 1-ton basis. So that's not evident from the video. Data is then passed through an index or an API through essentially the system to form that MOU. So with that, Rosie will show you the video, and then we'll join together after an intro from InterOpera on some of the features that we're pretty excited about.
I think if we can play the video. I'll talk over it a little bit because the subtitles are quite fast. So here we really wanted to highlight, as I mentioned, the full end-to-end life cycle. Goldman Sachs, Allinfra, and Digital Assets collaborated on building this prototype platform. So here, this is the kind of the primary setup. This is a tranche creation, and actually putting in all of the components, including the MOI piece, to really show how bundled this product can actually be. The prototype that we built is able to be used by different types of participants. So you obviously have your issuer, you have your lead bank, you have relevant syndicate banks or joint lead managers, you have custodians, and obviously end investors. So all playing different roles on the platform. We just illustrate one type of user per slide just for the purposes of this video. So going all the way through kind of the benchmarking, fixing the price, etc., all the way through to tranche creation and product issuance. So the important thing here is really thinking about how you can use blockchain to originate and issue a product, making sure that you have the full history, life cycle, and traceability that brings with it as well. So here you can see we actually created a 10-year product. We created a tranche per annum, to make sure that you can really then have that per vintage usage of the carbon. So how much carbon abatement are you delivering per annum? And that will tie to a tranche of the bond. Everything that we do on the platform is atomic. So full atomic settlement, delivery versus payment. And one of the things that we did in the background as well is we had a settlement bot running. So as soon as it saw any matching instructions, it automatically settled them. So no involvement by a manual user was required. This is what Bill was talking about before. So really importantly, on the right-hand side, you can see that we have this expected MOUs and indicative MOUs in production to date. And the indicative MOUs production to date is a real-time or near real-time feed that we receive through from Allinfra Climate to be able to pull through the data from the asset that's being financed. And this is really important for an investor to actually understand how is the asset that I've purchased performing and how potentially is it not performing to the KPIs that were set. Here we're illustrating a shortfall scenario. So it's in the scenario that the issuer actually doesn't have enough mitigation outcome units to be able to deliver for that particular tranche. So how will they then purchase those from the open market, have validation from an ESG auditor, and actually then make sure they're really fulfilling the goal and the commitment that they made to their investor at the beginning of the day. So all of this just goes through the different flows. You've obviously got the paying agent that requires to play certain roles. The registrar is a very important role, and we'll come to that on the panel as well, the role a registrar can play, and making sure that ultimately the end investor receives their allocation and receives the payment that they were owed. So here again is the portfolio view. And that concludes the illustration. But this video is available online, and I'm sure we can share it after the session. But with that, I'll pass to InterOpera.
Hi, I'm Michael Chin, CEO of InterOpera. We're based in Singapore. And we actually got involved with this project, Project Genesis 1.0, where we built a digital green bond for retail investors. And because we're dealing with retail investors, we very much focused on what is called capital markets protocol, which means we need to focus on KYC, we need to focus on investor protection in the form of suitability, as well as the tax implications. So why don't we take a look at our protocol, which is probably 3 minutes long, and then we can join the panel. This is the pre-issuance element. And now we're at the issuance level. So this is the issuance of MOU tokens. So basically, this is a combination of digital green bond with MOU tokens, and thereby becoming a digital green bond. So similar to our previous colleagues' model, we also can deal with a shortfall by purchasing in the market and get it verified and delivered to clients. And of course, you don't want to do that too much because then it wouldn't be green bond. So we think that should be limited to a certain percentage, probably 10, 15%, maybe maximum 20%. So we built this entirely with the mind for financial institutions. So basically, we're designing things in order to encourage financial institutions not to change their behaviors too much. Then if they need to change their behaviors too much, then they wouldn't use it. So this is the reason why we're very, strictly trying to follow as much as possible to the current capital markets protocol. Thank you.
Great. So thank you. We will now move to our panel. And feel free, if you want to ask questions, you can put your hand up anytime. But we'll obviously open the room also for questions at the end. But maybe to start maybe with the genesis of Genesis. The genesis of Genesis is really Massamba. So Massamba had written a paper on the importance of moving finance from ex post to ex ante. And so the point is that to fund infrastructure, you need money, right? So what I hear a lot at this event, I've been here for the last 3 days and it's my first COP, is I hear a lot of focus on, how governments can fund, how international organizations and development banks can fund. But what I'm personally very surprised about is I don't see any of the banks here. I don't see a booth of a bank. I see everything else, but not a booth of a bank. Yet at the same time, we all should know by now that a lot of the funding for private sector projects is actually coming from the private markets. The private markets play an incredibly critical role that we cannot ignore. And as you know, the growth in green bonds has been spectacular over the last few years. It's been an incredibly successful product, so to say. But what is missing from it is, as said, to move that finance to ex ante, i.e. to enable you to raise this finance in order to do a project for which you know there will be positive carbon credit creation. Now, the other thing that finance, that always happens in the financial markets is some breakpoints. And the breakpoints are typically now called greenwashing, is where I'm supposedly issue a bond, it's supposedly green, but you can't check it anyway, right? So with this prototype, what we are integrating is, as said, the carbon credit data as they are being generated, which reduces that greenwashing risk in the construct of the product. So I know that when you look at this, you go like, what is this? The point is, this is where the rubber hits the road, so to say. We can do a lot of talking about very big visions, but unless we can relate it to financial markets and to banks extending credit and finance on a daily basis, unless we can do that, we're not going to bridge the gap to 2050, that's for sure. We're not going to hit that target. So here, as said, you got a bit of a contrast here of a grassroots private sector panel, except for myself. So I represent an organization called BIS, and the BIS is the central bank for the central banks. So as you may know, central banks are in charge of monetary stability within their markets. They oversee also banks. And one of the main concerns that is becoming a focus area, for example, organizations like the BIS, is indeed how green or brown are the bank books, right? So banks know that pressure is coming and banks want more green product as a result. And so in some, I said you have this green product here. So with that, I'll start, after this introduction, I'll start the panel. And thank you again, Massamba, for the initial idea of trying to do these bonds with these MOUs and MOIs attached. So Michael, can you maybe give us a bit more thought on a little bit what I just introduced, on what you see the importance of the grassroots capital markets and the development, for example, of the carbon markets?
Okay, so as you know, the carbon credit market is big. Certainly in the compliance market, it's probably going to near probably trillion dollar mark soon. And in the voluntary market, it's also growing very fast, already surpassed value of $2 billion. And yet, when I ask around my friends who are individual investors, they don't know how to invest in carbon credit. They do find some coins or NFTs who have exposure to carbon credit, but those are very dangerous, as we learned from the case of FTX and so forth, because they don't give you investor protection. They do not give you legal rights to carbon credit. So this is the genius of our protocol. I think what we have designed is something that will bring carbon credit, which is intangible commodity, into the domains of capital markets and financial markets. And this is exactly what we need. And on top of that, we're combining that with digital bond. And as you know, bond is the largest asset class in the world. There are more bonds than any other asset class. So by combining the two, we can bring carbon credit one step, maybe two steps closer to the current situation where it's dominated by companies that are focusing on carbon credit, but there are few, and professional traders only. So this is what we are trying to do here. And we're doing this with capital markets protocol by giving investor protection. And what is important with investor protection is that the operator's assets and investors' assets are separate. So in this case, carbon credit in the form of MOU is actually custodized with a bank. And by giving banks to custodize the underlying asset, you're actually raising the credibility to the highest. So this is the genius of this protocol, and I hope we can commercialize this ASAP. Thank you.
Good. So over to you, Bill. So I think for many people here, maybe this MOI versus MOU and the significance of it, if you could a little bit at your viewpoint to it.
Sure. So I've been quite focused on climate finance for the past over 2 decades, and for about 17 of those years, very much carbon credit related. And so if you look at the traditional contract structures, whether they're emission reduction purchase agreements or more recently ITMO transfer agreements, you have a proposition of a funding commitment and a funding being deployed. You have the expectation of future emission reductions, and then you have at some point the transfer of those. And one of the challenges is that, and so for example, in my various businesses, we've written forward contracts, carbon options with very limited advance payment. Sometimes a small option premium, sometimes a small advance payment. And one of the reasons that advance payment or that early deployment of capital is limited is you don't necessarily have the confidence that you'll have ongoing predictability as to whether that product will show up. And often, if you're a buyer, you may have voluntary targets that you've set, and maybe perhaps more painfully, you have compliance obligations that then meet with penalties if you're late or you have limited or less than the product that you expect. So having this solution where you've got an easily accessible instrument that gives you the rights to those future emission reductions, that's your MOI, your mitigation outcome interest, and then having the ongoing visibility as to the performance of the asset, even if that visibility tells me that the asset's likely to underperform, that allows me then to make decisions early about going into the market, hedging that risk, really trying to deal with that exposure. If I can do that, and I know I can do that, I'm more likely to deploy capital early on in the project and really unlock capital that project needs. Then on the ongoing basis, as that instrument gets delivered in the MOU form, now I've got an instrument that not only is a legally transferred claim, again, whether it's under Article 6.2 or 6.4, but it's also an instrument that has a permanent digital record. So what's the value of that? well, I've got my carbon instrument that I can use for the particular claim, but I can also make that very easily accessible to my accounting firm or maybe a ratings agency, other parties. I can give them credentialed access to that data, so I don't have to then do another carbon audit relative to that particular tranche of product. So it's quite a versatile, it's not double counting, but it's using that data for the variety of reporting purposes and finally in that format. So those of you who've been in the carbon market, your forward agreement or option agreement, your carbon credit is now in your MOI and MOU pair, which has the benefit of that digital permanence, that digital feed that gives you the ability to hedge risk and optimize your carbon exposure.
So thank you, Bill. And so Rosie, obviously Goldman is one of the leading investment banks in the world. And you bring a lot of capital markets experience, in particular, including debt capital markets experience, which is relevant here. So could you a little bit provide your viewpoint on the challenges that you see with bringing a product like this, which is innovative, but bringing it to market?
Yeah, of course. And I actually just want to disagree slightly with a comment that Michael made. I think recent events have actually shown us the necessity not just for investor protection, but investor education. And I think that's one of the really key things that kind of recent digital asset events, and kind of won't name them specifically, have really shown us that it's investor education that is really important. And actually I think on the previous panel there was a question that talked about we need to further decentralize. And so that comes to the challenges that we face with this is we're going to need a lot of investor education. We're going to need a lot of investor education from a kind of product structure perspective, from a marketability perspective, from an access perspective, but equally from a pricing standpoint. How do we price this type of new product, this bundled instrument that doesn't exist in the market today? In the market today, you would have two different desks at both the buy and sell side that would be pricing and purchasing this product. So how are they going to work together in concert to actually price, purchase, hold this and trade this asset? So I think the investor education and kind of marketability is a very important one when we think about how to move forward. I think the next one is really thinking about the legal and reg side. So how do we classify this new product, bond plus mitigation outcome instrument and subsequently mitigation outcome unit? What is it deemed as? Is it a derivative? Are we looking at it as a warrant? What's the structure? So there we need to think very carefully, and it could be on a jurisdiction by jurisdiction basis as well, which will make the product quite complex from a cross-border sale standpoint. I think the third point is really then, and also kind of listening to the previous panel, how do we think about the registration of this and the role that a registry will need to play when we think about these MOIs and MOUs? And I think there's definitely a role for some sort of public body to support this initiative and to support how we register, how we record, how we report. But again, going to the very first point I made, we still want to ensure that we're not too centralized. Because if we are using kind of blockchain, the power that blockchain brings is the technology itself is not really substantially flawed. And this was a previous panelist said this as well, it's humans that use the technology that are flawed. So how can we make sure that we have some sort of regulatory body that can leverage blockchain technology to be able to facilitate the movement, the record keeping and the registration of these assets in a way that is centralized only to the extent that we require it to be, and decentralized in every other form?
Yeah, sure, Bill. Go ahead.
I just want to add something to what Rosie just said in the beginning in relation to some of the other aspects that are needed, including education and demonstrations of product and then eventually uptake and maybe pilots of product. One of the things that one of the talks that I was quite inspired by a few days ago was over at the Thioye Pavilion, and one of the missing pieces, but a piece that's being developed, is the framework for bilateral cooperation between countries. And what was inspiring about it, and part of the puzzle here for us in terms of looking at mitigation outcome interests and units, is it was the first, or they claimed that it was the first case of a transaction under Article 6.2. So Switzerland, as I understand it, has bilateral agreements with 8 countries thus far, and beyond that, established under that bilateral agreement with Thailand the framework for a domestic Thai standard ITMO issuance and a contract for the purchase of those ITMOs for a project that was approved under that Thai policy. So now if we look at, in addition to bringing technology solutions, financial distribution, the banking solutions, you also need that part of the market to take shape. Government to government, bilateral, multilateral agreements, the contracts that go along with that, the understanding that goes along with that. And the inspiring thing is that that's happening, and we're seeing now transactions, and this would be a digital overlay that would allow those transactions to accelerate over time.
Thank you. Yeah, that's really interesting, the Thai example. So, yeah, so to maybe pass back to Michael. So, Michael, the prior panel was explaining the developments in terms of international registry and so on. So, having worked on the prototype you were working on, how important do you think this is, and which aspect and why? What aspect is the most important and why?
I think a lot of people know that carbon credit registry is digitized, but it's not digitalized. In fact, many governments are still using Excel spreadsheet to register and keep track of their carbon credit status. So we definitely need a new technology, and I think the previous panel also agreed and proposed very strongly that it should be blockchain technology in order to avoid double counting, in order to avoid fraud, and most importantly, interoperability. So you will see many different standards using different networks. Some will use this particular private chain. Another will use, different chains, and they need to be connected at some point. As Bill mentioned, that ITMO, the ITMO market, is growing, and there's going to be offsetting mechanisms between countries bilaterally or multilaterally. So I think it's very important that we need to move to blockchain-based registry, but we also need to make sure that there's interoperability between Web 2 and Web 3, because there will be some countries still using Excel spreadsheet. And then we also need private chains to talk to each other, and then avoid double counting and all that. So I think it's very important. Now, when we look at all these things, as it progresses, I can see a lot of financial companies getting into this place because, for example, bilateral ITMO will draw arbitrage opportunities by financial institutions. So already Thailand is leading that effort. I do believe a lot of the emerging markets-based financial institutions are looking at this opportunity to produce carbon credit cheap in their own country and be able to offset in slightly higher price at developed countries. So I think this is going to grow the market. As we talked about, carbon credit, certified carbon credit being custodized at financial institutions will give credibility. So it's no longer, NFTs or ICOs, but this will give credibility to professional asset managers to use to create financial products in the form of collective investment scheme. So that will also grow the market. So I think this is the first step. I think we took the right step, and this is just the beginning to embrace carbon credit into capital markets.
Thank you very much for that, Michael. So Bill, actually Michael just touched upon Web 2 and Web 3, and I think this is a problem underlying a lot of things right now, like, and I think it was touched upon in the prior panel as well, is like, how fast can you accelerate an evolution? I mean, the strange thing is the blockchain technology is here, but the adoption isn't here yet, right? Except for certain subsets. But let's say mainstream adoption is not here. So in sum, can you maybe help elaborate a little bit more as to the importance, though, of Web3, or the potential of Web3 in regards specifically to this evolution in terms of carbon and climate change finance?
Sure. So maybe I'll start by saying there are, and over the years, there have been various projects implementing Web3 and blockchain to either participate directly in climate finance or something adjacent to climate finance. And maybe I'll say at the front end, very creative, well-intentioned projects, some of which are headed down a path that is quite productive for the market. Some, again, probably not intentionally, may be either misguided or destructive for certain aspects of the market. So I would say there's a lot of initiative in the market, but I think I would just sort of caution the Web3 community to really be rational and have the traditional carbon finance market as a partner in that endeavor, and really, spend time creating. I won't give too much away, but the panel following this, we have a group of the Ethereum community together with some of the traditional carbon finance community making an exciting announcement. It's a very interesting Web3 initiative that we're undertaking. But maybe to kind of get to some specifics, we talked about, in the context of the MOU, the carbon forward together with the carbon settlement, using digital MRV. Probably if you've been here for a few days, you've heard a lot about digital MRV. That's measurement, reporting, and verification. So in the traditional market for generating a carbon credit, you've got a process that often takes somewhere between 5 at the quickest, sometimes probably average 6 or 7, and sometimes 8 or 9 months to go through one verification. So data collection, reporting, transcribing that data into computed emission reductions. Now we're missing data, so we have to do another site visit, gather more data. It's a very expensive, opaque, and backward-looking proposition. So digital MRV is one application that's growing quite rapidly in the market. I would say a year ago, and then in the couple years preceding that, when we were deploying that technology, the traditional market was very interested and very apprehensive about that concept. I think part of it was the view that if the traditional market takes one hand off the steering wheel, what happens with the market? But now you see many of the standards and many of the organizations that lead the climate finance market not only embracing Web3, but setting up working groups, deploying pilots. So you're seeing digital MRV, the measurement, reporting, and verification taking shape. I always add an A to the end of that, so that's for allocation. So importantly, you need the data, you need the product, you need an emission reduction, you need to allocate then that to one party who's ultimately making a claim. And then maybe 2 bookends on the ground level. There are really interesting projects using Web3 to now figure out how to share co-benefits and share the value of these investments and the actual operations and the value being created on the ground with the local community. So there's really quite exciting projects that are focused on that ground level contract-based sharing of value with the community. And then maybe up at the upper level, you've got initiatives like the Carbon Asset Data Trust, which is emerging out of the climate warehouse that the World Bank started. And so that's sort of an upper layer using Web3 to then be able to look across the various registries and the transactions and the claims that are happening to make sure that there's no double counting, just hypothetically a credit that was issued on a particular voluntary standard and then claimed under an IPMO, that it's not the very same ton being claimed by 2 different parties. So you've got Web3 enabled capability to make sure that there's kind of a top-level integrity across the market. And there's going to be more to come in terms of Web3 participation in the market.
Maybe I can just
Yeah,
add a bit.
go ahead.
I like your tee up for the next panel. Very nice. I think I agree with everything Bill said. I think the main thing is really thinking about how can you connect all of these different off-chain and on-chain currently ecosystems together, and that's something that kind of Web3 or Web 2.0, kind of a 2.5, as people say, maybe we're in right now, can help to do. But I think ultimately it's about how can we transition to a fully digital-first ecosystem, but we're not quite there yet. And as Bill said, there's been kind of projects over the years that some have hit the mark, some haven't hit the mark. But it's really about using blockchain as a foundation, as an infrastructure that can help to facilitate that movement and connection to eventually everything being in a kind of decentralized world. So I think it's a fantastic technology. We just need to make sure that it's used in the right manner by the right actors as well.
Thank you. Yeah, I think, let's say I'm still, I would say, a layman human being as it comes to understanding all of this. But I think this is where I see the size of the challenge. There is all these commitments from governments, but how are they being measured, right? If it's on a spreadsheet, then I think we know what happens to spreadsheets, right? There's been many frauds with spreadsheets. So I also hear there is commitments, but there's very few measuring. In fact, only a few countries right now are even checking whether these unautomated methods are even correct. And to the extent that they are correct, they're not going to meet the 2050 targets that we have set. So if you think about it, this need to automate is huge, really, to achieve the overall targets that are being set at this event. And then the question is, do you automate these things as said in a centralized manner or in a decentralized manner? And the answer invariably will need to be more decentralized, because countries by nature are self-sovereign and decentralized. Each of them is an island actually of their own. So I do see the absolute need for connecting the dots there. I think in the absence of connecting the dots, we will fail, is what's my own view on meeting those targets that are being set. And I think obviously the prior session on the registries is incredibly relevant to this. And I think, as said, grassroots efforts like our panel are relevant to it. And I also think that what you may hear on the next panel in terms of Web3 participation is equally relevant. So I think we're facing a mountain of a problem that is so high that we need many, many people to chip away at the solution. So maybe a question to any panelist who wants to respond, but what do you think about the commercialization opportunity of something like what we have done? And even if it is connected to, let's say, the voluntary markets as opposed to the compliance markets?
Well, maybe let me take a crack at it. I think what I envision is that through this protocol, we have a concept of MOU and MOI. And MOUs can be tokenized and will be can sell in digital asset markets or digital asset marketplaces or exchanges. MOIs, on the other hand, they're tokenized as a collective investment scheme or derivative contract, and there will be financial products listed on normal exchanges. So this will proliferate the carbon credit market as a whole, because now carbon credit products are traded both on carbon exchange as well as your stock exchange. So I think commercialization is something that will happen. I think it's just a matter of how fast can we go. And I think because this asset class is relatively new and it's also quite sizable and growing, there'll be less resistance than traditional asset classes like stocks and bonds. So I do believe carbon credit might have a faster adoption.
Rosie?
Yeah, I think just to add in terms of some practical steps, the way that we look at this is really, well, first step is how can we use this type of data better? And how can we really hold issuers truly accountable to what they're stating that they're going to deliver, whether it's green bond, sustainably linked bond, or another type of financial instrument. So I think practically the first step is actually using that data and kind of forcing the issuer to be held accountable through the use of real-time tracking. So I think that's the kind of very first step that we can practically take today. We have the data, we have financial instruments, we have the infrastructure. I think the second it goes back to my point is then investor education and market education. So if we want to expand that product set to be it's a unique product or a bundled product, we're then getting it to actually understand, well, how do I price this? How do I sell this? Where do I trade? And that's when we'll need venues to actually be able to support this initiative. But I think first step we can tangibly take today is using to kind of force the issuer to be held accountable to their goals.
Go ahead.
Yeah, and I guess what I'll add to that is, and maybe I'll give a shout out to Genesis 1. So today we're talking about Project Genesis 2, which involves this digital MOI and MOU. Genesis 1, which was last year, was the concept of a digital green bond with just the digital data reporting to bondholders. Now, the reason I bring that up is whether we're talking about explicitly a carbon credit or a digital carbon credit, or even just the allocation of a claim, the measurement and allocation of a claim, and think of that in the context of debt agreements and bonds. It's often the case that lenders negotiate in those contracts the rights to allocate the claims amongst each other. It may not, again, go through a crediting process, but they still need, for the purpose of their green deployment of capital, the ability to, one, agree what the numerator is. What is the impact each year that we're dividing amongst the club of debt providers? And then number two, that data is real, that it's agreed upon, and that it allows for the allocation of that now across the lenders. And so even in that Web3 application, having that digital data feed in the green finance market in general, leaving aside carbon credits explicitly, is really important. And I've been having conversations with debt capital markets desks where they're finding themselves in a very frustrating position where they're deploying capital into markets where the asset's been built, it's operating, but there's no agreed upon source of data where that allows them to now agree what number they're dividing, and it's gotten to a place where it's starting to stifle their ability to deploy more capital because they've got to now report to their team leaders, I'm filling that, we've got these carbon finance targets, and here I clearly met that by this number. They don't have the number to give. The last thing I'll quickly say is COVID really underlined the value of having that digital MRV system in place because, as I mentioned before, the traditional and current process involves having a team visit a site. Often they're overseas. They need to get to a site. They need to spend time at the site. They need to collect data, sometimes multiple visits. And over the course of COVID in many markets, that has actually become, if not difficult, absolutely impossible for verifiers to do manual verification. And so just by virtue of that sort of barrier, figuring out ways that we can get insight from assets on an ongoing basis, giving the financier some visibility on an ongoing basis as to what's going on, but also to be able to deliver a product, it needs to go in a digital direction. Again, I'll say it's not blockchain or digital everywhere we can jam it, but rather where are those places of inefficiency and friction, and using blockchain sensibly, using MRV, using Web3 sensibly and rationally with the rest of the market, kind of holding hands and really making a difference. So,
thanks for that, Bill. That probably is a good segue into our final question, which is what I call the crystal ball question. So I think I want to ask each of you, if you could have your, let's say, your best case scenario in 10 years' time, how does it look like? And you can come from any perspective on this.
Well, in the current capital markets, there's an instrument called bond with warrants. And bonds warrants actually usually detach from bonds and sold separately, and thereby creating the more liquidity in the equity market. So I see digital green bond with carbon credit as MOI using smart contract will exactly do that. It will deepen the liquidity of carbon credit market, and I do believe you will see in many exchanges in Asia, you can buy digitalized carbon credit CSI product using MOI. CIS product, collective investment scheme. So I would say in 3 years, it will definitely be in a commercial phase.
Great. Over to you, Bill.
Yeah, sure. So, we've talked a lot about that maybe vanilla part of climate finance. So how does Web3 help carbon credits? How does it help improve bonds and make that product more believable and really unlock capital? So I guess thinking about the crystal ball side of it, I would, for me, it'll be really interesting to see how Web3 plays a role in then going further to connect, as I mentioned before, with local communities. So how can we now connect that product and connect the financing with the stakeholders on the ground through rewards and through really a direct, transparent, visible connection to the outcome that they're contributing to. And even, we've been having some really exciting conversations with groups that are supporting almost a new generation of activists and negotiators, the youth. And there's been some really cool metrics to see how activism and youth negotiation really done well can lead to tangible, verifiable emission reductions. It may be a couple layers away, so it may lead to policy, which then leads to implementation, which then leads to outcomes. But I would love to see Web3 find a way to help that sort of initiative that's really professionalizing activism and negotiation amongst the youth to then almost become a way to verify the actual impact, the actual emission reduction result or other ESG benefits that's leading to, quantify it, and use that to then, use the value of that to then drive support of those activists that are getting those wins on the board. And I'd love to see that. That's sort of the crystal ball, down the track.
Yeah. So Bill, maybe to add to this, again, my layman point of view to this is, if you need to do all this verification manual, right? So first of all, it's slow because it's manual. But secondly, you also have to travel for it, which means there is actually also bad carbon outcomes from even that activity alone, right? So third is, because you need these two things, a human is traveling, actually that equals cost. So it also makes the whole thing cost unattractive, right? So in my opinion, this digitization, as you say, of the MRV side, it's nearly like a no-brainer. It's something that has to happen to make climate finance scalable. And I think we saw that in the prior panel as well. So over to you, Rosie.
No, I was just going to kind of agree with everything Bill said. I think one of the key things is really about integrated markets. So whether that's kind of involving the community, giving back, but also in the finance space, it's not just about bonds, it's kind of, or carbon credits, it's about funds, it's about green banks, it's about fiscal policies as well. All of this needs to become integrated with the community that it's serving and with the community that it's pushing back to. So I hope, and kind of crystal ball, that in 3 to 5 years' time, that's the space that we're living in, that we have these integrated finance markets for all types of green, carbon, sustainable finance. I think blockchain is definitely going to play a role. I think there's probably other technologies that are yet to appear that are going to play a role as well. I think IoT devices are already and will continue to play roles as well. And I think it's going to require, and this was touched on the previous panel, involvement from public and private sector hand in hand. The private sector, we can kind of help to fund these projects and initiate them in the first instance, but we'll require the public sector to continue running them, to continue the support and to ensure standardization of them. So I think we're going to see a lot more hand-in-hand collaboration, we're going to see integrated markets, and we're going to see markets that are really giving back to the community they're serving.
Yeah, I think I just want to add my craziest idea is that as Rosie talked about communities, I think as IoT devices continue to improve, you may see bondholders or these digital green bond holders using IoT devices. They're working hard to save the earth. And that's being tracked, and that is being rewarded by higher interest rate and higher carbon credit given to them. So I think you can actually change the behaviors individuals, create awareness, create community, and give back to the community overall. So you can actually change the behaviors as well.
Thank you. So any questions from this room? Okay, so oh yeah, question? Thank you.
Yeah, thank you for the really interesting panel, and I think today there has been a lot of good points on the benefits of blockchain technology towards those types of projects. My question would be where do you see, if you do see them, the limitations for the application of blockchain technology, and how are you planning to overcome them within the Genesis project?
I'm happy to start. I think limitations, and Bill touched on this earlier, is trying to put blockchain as a solution to every single problem. It's certainly not, and there are other technologies that need just as well, if not better. So I think one is not pushing it for every challenge. And I think secondly is about not pushing it before it's ready. So we need to make sure that parties understand what the technology can provide, how to use it, before putting it into a market or putting it into a solution that might not be ready for that. So I think it's more about maturity and evolution than a fundamental problem with the technology itself.
Yeah, I would also add the behaviors of financial institutions, because unless they're involved, the market is not going to grow. And that's why if we design technology that is completely in disregard for current behaviors of financial institutions, then you're not going to get them as buyers of this ecosystem. We need to encourage them to join this movement because it is good for the community, and it is also that financial institutions can contribute and make money as well. So that is important. So I think it's the behaviors of financial institutions and policy along with technology that will enable this market to grow.
And I'll add one more thing. One of the aspects that the Web3 and blockchain community needs to be better at, and I think is getting better at, is educating and having a dialogue with the traditional parts of the market, whether that be the accounting or standards, because one of the things that I've seen is, again, as I mentioned before, a very strong apprehension from traditional markets and I won't sort of be specific about which part of that, but 80%, 70% of our revenues comes from the manual difficulty of the process. You're asking me to get rid of all that. But where the education is coming in is once you put this on digital rails and you create product that has that level of insight, the value-added services that the traditional players could add on top of that, the stretch is now intellectual and really being able to bring better insights to their clients. It's not the manual legwork that they're getting paid for, but better quality advice, better quality insight. And I think the blockchain community and the Web3 community has a duty to, we're excited about what we're doing, but better educate and work with the traditional markets to really get them to understand the power and the value to their businesses going forward.
So thank you very much, and I'll conclude with my opening statement. I do think it's incredibly important to have banks at the table, because they are the lifeline to finance and to credit in the economy every single day. So if I needed to say my wish, it would be to have a number of banks here in the future that compete for being the best at any form of green finance. And I think when we are at that outcome, you automatically see the markets prepare for the future. And the same for, of course, Web3. So the banks representing Web2, but as said, a very important and I would like to see Web3 present here as well in the future. We will have the next panel on this topic. So anyway, thank you very much for being here, and I hope you enjoyed this. Thank you.